Good morning, and thanks so much for joining me today. This is Stocks to Watch on BloombergQuint, and I'm Mathew. I've been wrong once in the past few days about how the Indian markets react to the handover from the US market, so I won't jump the gun, but suffice to say that it wasn't the best. 940 points dropped by the Dow Jones Industrial Average overnight. Let's just say that volatility is likely to be the name of the game, particularly today when it's weekly and monthly expiry. But we've got a few interesting stocks to talk about, frontline stocks to talk about. So let me introduce my guest, Avinash Gorakshakar of Profit Mart is joining me this morning. Good morning, Avinash, and thanks so much for joining me today. I want to talk about Axis Bank first, and it was a strong set of numbers, and it actually has prompted a lot of brokerages to come in and say that they are upgrading their target price, and they all have a buy rating. You have net interest income that came in at 6,102. That's slightly below estimates. The asset quality has actually improved on a quarter-on-quarter basis. Net profit has come in at 1,683. But more importantly, it seems like they're going conservative on the provisioning number. So according to the management, they now have 10,900 crore that is set aside for any possible issues, shall we say, with regard to the pandemic. How did you see the numbers, and are you also positive on Axis?
Good morning, Alex. I think numbers presented by Axis Bank were definitely much ahead of what the street expected. And I think you're right in saying that the asset quality number has definitely shown a good improvement. One important other element in the numbers was the slippages number, which also has come down quite significantly. So I think net, the numbers are definitely ahead of street expectations. And as you rightly mentioned, the provisioning number has slightly increased ahead of what the market expected. But I think this contingency provisions which the bank has made clearly spells out that the bank is ready to face any eventuality here. Overall, I feel that the third and the fourth quarter, Alex, could be a much more stronger quarter for Axis Bank, and more importantly, the kind of run rate on moratoriums and the asset quality. If the bank is able to maintain or improve their asset quality levels, then the markets would be pleasantly surprised. I would be more positive on the fact that this is a bank which has been a slightly conservative bank and has underperformed. But if you look at the operational metrics of the bank, these definitely stand out. And I would not be surprised that in today's session you could see a decent kind of upside. Our sense is that you could see a target price of around 630, 640 here. And I think this is definitely a good price because the price to book at 1.7 times 1 year forward earnings looks pretty attractive considering the size and the scale of the bank.
It's interesting that you point out 630 because I think broadly brokerages have that same view. I think the target price is ranging between 600 and 700. So you're more or less bang in the middle of those expectations, but decent upside being projected for Axis nonetheless. Let's talk about BPCL now, Avinash. And earnings are out today, but I was anyway going to pick this stock up because of the kind of moves that we've seen in the crude oil prices over the last few sessions. Brent crude now slipping below the $40 per barrel mark once again. But let's look at the numbers as well. Revenue seen up as much as 34%. You have net profit seen down 43% at 1,176 crore. EBITDA margin seen at just under 5% compared with 17.2%. So it's not going to be the best quarter, but are you seeing positive signs, especially when it comes to the crude oil prices? And do you think that's going to have a major bearing for BPCL?
Alex, I think the bigger issue will be not the numbers presented for quarter two by BPCL, but the fact that going ahead, what is the management commentary on the throughput and the volume growth expected, from large consumable segments like automobiles and aviation sectors. Most importantly, GRM margins would be clearly watched because if crude prices continue to soften further, that would obviously help them. But they still probably may be having a large amount of inventories already, stocked up. So possibly we may not be able to see the entire benefit in the second quarter, but obviously the third quarter and the fourth quarter could see some operational improvement on this metric. More important would be, the kind of update on the strategic divestment, because that is something which the markets are keenly awaiting. And I think any news flow on that and some kind of run rate on that could possibly give a sentimental booster to the stock. So I would believe that the markets would not be surprised if the numbers come in negative on a YY basis, because this is largely expected by the markets. But going ahead, the commentary and obviously the traction in the crude prices and how the outlook for the second half is considering that there's a decent uptick in the automobile and the aviation sector, I think should definitely be a standout and a better period for the company. So I think net net one should hold on. One should obviously wait for the commentary and the results to come out, and thereafter, the stock could possibly see some directional movement.
Understood. Now, I assume you're not holding the stock, Avinash, BPCL. If you're not holding the stock, what would convince you today to buy the stock very quickly?
See, I think, Alex, looking at the kind of assets and the operational efficiency of the company, I would not be surprised that the divestment as a strategic sale would definitely be considerably higher than the current market price. And our sense is that investors who want to take a medium to long term kind of position should actually use this, weakening trend in the share price to start accumulating now. I would not be surprised that hopefully if January or by March this strategic sale happens, the stock would see a significant upside. So I would say that it's a good opportunity to make a contract investment now because the price is in the favor of the investor and the risk reward could be quite significant.
Understood. Let's talk about the third stock, the largest player in the car segment, Maruti Suzuki. A lot of people are talking about the possibility of a revival in the auto sector as a whole, and particularly on companies that are rural facing. Maruti Suzuki revenue seen up 13% in the second quarter at 19,137 crore. EBITDA seen up at 26%. Profit seen up over 10%, and margin seen improving to 10.6% versus 9.5%. But at the same time, one would assume that this is going to be another not so great quarter because perhaps it was still building up, it was still opening up at that time in the second quarter, right, Avinash?
Yeah, exactly. I think, Alex, obviously, normalcy is yet to come into complete, form. And I would believe that, you got to look at the quarter from a sequential basis rather than a YY basis. Although numbers, even on a YY basis, could definitely show a decent improvement for Maruti. Previous first quarter, Alex, the company had incurred a operational loss and a, net loss of almost 250 crores. So comparing those numbers, these numbers would stand out quite significantly because we are also expecting a profit after tax of around 1,550 odd crores. I would be more interested and watchful on what is the kind of management commentary on the volume growth and the demand scenario, considering the fact that the third quarter is a festival quarter and due to the corona COVID issue, I think personal mobility now is going to be very important. And I think in that perspective, Maruti stands out significantly in terms of their market share and their reach and their product bouquet. So I would believe that, numbers definitely are more or less discounted in the price for the quarter two. But I think the commentary on volume growth, the demand scenario, and the kind of expectations for the festival period would be, key, data points to watch as far as Maruti is concerned. And I think the stock could react positively only if the profit this time comes anywhere above 1,600 crores. So till then, I think it's a hold. I think one should watch the management commentary very closely, once the management puts out the results today.
Absolutely. Well, key frontline stocks to watch, and there are several others that are likely to be in focus over the course of today. Thank you so much, Avinash, for joining me and sharing your views this morning. And to you, dear viewer, it's going to be an interesting session. Like I mentioned at the start, it's monthly and weekly expiry on the futures and options side. So do stay tuned. We'll bring you all the updates on Bloomberg Quint.